What is up, everybody? Happy Monday morning. We're going to start off here on Monday with just a market update. It is 10 a.m. and we have market open. So let's jump into this. As you can see right here, I have pulled up the S&P 500. Huge, big gap open the last on Friday and today to all-time high. This is the most hated rally ever. I also have on here the 50-day moving average, which we're going to look at it on a couple other different charts as well. This is an important average. The 50-day is seen traditionally as like the 50-yard line in American football. So if you're over it, you are doing well in control. And if you are below the 50-day moving average, you're on defense and you're doing not so well. So that is what we have here on the S&P 500. Huge day. Of course, other big news today is the China deal. Most likely we're going to get a China deal. Scott Bessent, Treasury Secretary, is out there saying that China is ready to make a deal. The news is it's going to be a 1-year pause on the rare earth stuff from China. And once again, the China bulls are in disbelief. So, of course, we know here at Rogue Macro that China is on the defense. One, they're a communist country. Two, they're much more heavily indebted and in a worse financial position than the United States. They are export dependent, meaning they need customers. And who are the biggest customers in the world? Of course, that's the U.S. customers. So the customer is always right. So China is on the back foot, not what the China bot accounts will have you believe. And as you can see, the S&P 500 is showing it's very happy with the results of these talks, gapping up 68.54 on the S&P 500. Dow Jones Industrial, same thing, gapping higher, and NASDAQ with a massive gap, probably the biggest gap of them all on NASDAQ. But you can see where this 50-day moving average has been pretty important for the stock market here. On the Dow Jones, it's perfectly tapped right here, tapped a couple times back here as well, with even a close down just below the 50-day moving average on the Dow Jones back on October 10th, but it has been rallying ever since. So some other markets I wanted to take a look at that the 50-day moving average has been very important is oil. And you can see oil is battling right now with the 50-day moving average, which has been very important over the last few months here. Again, remember, if we're below the 50-day moving average, we're on defense and it's weak. It's a weak market. I have been saying I expect oil to be weak for many years now. Pretty much calling the top to close to the day on oil back here in the aftermath of the Russia invasion of Ukraine. And we have been going down ever since. I expect this to get weaker. I saw a story just the other day, I think it was Friday, that vindicated a lot of my belief because I did some analysis last year. Maybe I'll repost that onto the Substack. Guys, make sure you subscribe to the Substack. Follow this Twitter account as well for these kind of updates. I'll try to make these quick. So last year I wrote about the declining demand for oil from Japan. And at the time, I don't know why I didn't think to go and actually look up the oil consumption statistics, but I said, look, they're losing about 1 million people a year. It's going to be about 1% every year in the foreseeable future for the Japanese population. Their demand for oil should also decline by about 1% because you're going to have fewer people wanting to go fewer places and also fewer trucks needed to make fewer deliveries. So it's a grind downward in a demographic decline. And their demand for oil should go down. Now, if you extrapolate that out to the world, we're looking at a major hurdle for demand going forward, okay, as population shrinks. And that doesn't even consider that economic activity per person will probably go down as well because you'll have fewer inventors, fewer investors, fewer innovators, fewer workers, fewer people demanding goods and services. And so it just grinds the economy down, less and less demand, marginal demand for energy. So the demand for oil should go down. And that's one thing I've been talking about. I don't know if it'll stay in this channel forever. Probably not. But, the general demand trend for oil is lower. And taking a look at this 50-day moving average is what I started with. There is some resistance here. So I don't know anybody that can not believe in TA and then look at these charts that are all really centered around the 50-day moving average and not see something here. So we'll see if this breaks up. I wouldn't be surprised. I mean, I'm not calling for a straight line lower or anything. It could recover, up towards 70, but then eventually it's going to head back down. And long term, it should probably hit 50 over the next 12 months or so. Okay, the other market that is a big global important market is the dollar. And one thing I did here was I took monthly candles and I went through and took the average of all the monthly candles in the history of this data series here on TradingView, and it came out to 99.01. You can see 99.01 over here. And where are we on the dollar? Well, right now we're at 98.87. So just below the all-time average for the dollar here on this. If we go down to the daily, you can see that 50-day moving average was also very important right here. Back on 17 October, bounced right off the 50-day moving average and is now struggling with this all-time average of 99.01. Just like oil, I expect to get weaker. The dollar, I expect to trend stronger relative to other currencies. Japanese yen, the euro, the pound, all these other major currencies are going to weaken relative to the dollar. The dollar's not perfect, but it is the cleanest dirty shirt out there. All right, and last but not least, let's take a quick look at Bitcoin as well. And you can see Bitcoin has been weaving up and down around the 50-day moving average. Back here on 21 October, it was very important with that wick, just barely below the 50-day moving average. Last night, when futures opened on Sunday, we did end up closing above the 50-day moving average, and now we are struggling to continue breaking out above that 50-day moving average. So that is very important. Also, looking at Bitcoin, it is a broadening wedge. Volatility is coming back, and so we will see probably a return to the top here. And if that will be the final one, maybe we'll break out. We'll have to wait and see. But okay, let's go back to the S&P 500 and end where we started. Huge breakout here on the day. All right, guys, this is Rogue Macro. Make sure you like, retweet, follow this account. Check me out on YouTube and Substack. And that's it for this one. See ya.